before we exit for lunch, let's talk about exits. So why am I, there are so many people in this room who are actually in a startup phase, in a seed stage, and why are we talking about exit? Because it is extremely important that we talk about exit right from the get-go. So about 3 days back, I was at the conference in Istanbul about the World Business Angel Conference. And in that conference, the US ambassador to European Union said something, that Europe doesn't have a startup problem. Europe has a scale-up problem. And that is so true. And why there's a scale-up problem is because most of the time, people are not thinking about exit. If you were thinking about exit from day one, then you will scale up. You will scale up beyond your borders. And Turkey particularly has a very unique situation where the market is big enough, but it's not big enough. The market is big enough to stay contented in Turkish market, but it is not big enough to get a major exit and go global about it. And so it becomes very intimidating for Turkish companies to go global. And so I want to lay out some of the preparation, what has to be done on the exit in the next 20 minutes or so. So I think you can read about me online, but I've been doing a global business for the last 25 years. Even currently, I'm investing in many companies, but also there are 2 of my companies are heading towards IPO in the next 2 years. So I was in Istanbul in 2010, and at that time, there are about 15 to 20, 15 countries I went to, and I met a lot of startups. And what I realized was there was a lack of startup ecosystem around the world. And within that, there was obviously a lack of global investor who can help these startups. So I started a new group, and within the group, I started a new company called Cross-Border Angels, which is basically a group of super angels who look at companies internationally and invest in international deal flow. So let's talk about exit. There are 3 types of exit. One is IPO. Another one is, you get acquired by either an institution or by corporate, or you can have a partial exit by strategic investments. Now, I live in San Francisco, and in the Valley, if you know right now, the average IPO is about 9 years. It takes about 9 years to do IPO. Average exit is about 7 to 8 years. And so you have to really start thinking about which way you're going to go in terms of your exit. So this is the key thing. Investors invest in exits, right? That is where they get the return. So the investors should be talking about you with the entrepreneurs about exits from day one. So how do you prepare for the exit? So start planning on exit from day one. And it's absolutely crucial that why you want to plan exit from day one is that it will allow you to select your investors, it will allow you to select your market, it will allow you to select your strategic acquirers from day one. Now, it doesn't mean that when you wake up in the morning every day, you have to think about exit. I think you still build companies, you have to build revenues, you have to build companies, good companies. But at a macro level, you have to have a clear plan that am I going to be an IPO company, or am I going to be in a strategic exit company? Also create, right from the get-go, create various benchmarks. And these benchmarks will allow you to do the right kind of, you already do the benchmarks. I've seen most of the PowerPoints here. But also along with that, you have to find what could be the possible valuation at each benchmark. If you look at each benchmark, what is the valuation and what will be my dilution? right? Because you want to preserve your equity at each benchmark. And for each fundraise, what kind of resources do I need? Do I need more, in terms of, for that benchmark, do I need more marketing resources? Do I need more funding resources? What kind of resources do I need for each benchmark? And if scaling is not your thing, you have to really think this through. Then you have to exit at that point of time. So let me give you some numbers and examples. So let's say you went through your seed round, you had your first angel round, probably 250, 300, $500,000. That point of time, your valuation, or you may still have a convertible note at that point of time. Your valuation could be, let's say, $2.5 million, or $5 million, $3 million. But when you get into a round, well, let's say you want to raise a $5 million round. Now, whoever is investing in you at $5 million, they're expecting 10 to 15 times return. That means they're looking at $50 to $75 million return. Now, if you have diluted to 30 to 40%, that means you have to exit at about $150 to $200 million company. You have to build that company. Now you think it through that, the whole exciting part you had of the startup, and you have that passion about building the company. Are you the person who will take this company for $15 to $20 million, or to all the way to $200 million? If you are a first-time entrepreneur, maybe you don't. So either you have to bring in a CEO or professionals, or sometimes I feel that you should exit at that point of time, and then probably to build the next one for a much longer run. And also, I think I'll just spend a little bit on this concept of stakeholders' interest. I also believe that right now, currently, all the businesses are focused on shareholders' maximization. I feel that it should be stakeholder maximization. That means not only companies and investors should profit, but also the people should profit, and also planet should profit. So if we talk about the investors, so you have to select your investor as per your now exit plan. So if your company requires multiple rounds of funding, then you have to go through the VC round. That means you have to have an investor, angel investor to start with, who are prepared to dilute at the VC level at a various level. So many times the interest of the angels and the VCs may not align. So you need to have investors who actually understands the VC rounds. If you are looking for strategic exit, then you want investors who are smart, who can help you in taking you to the stage, either in terms of sales or marketing, or in terms of introducing to the right companies, the right acquirers. So you select your investors accordingly. If your business has impact investment, then you need a patient capital. You need to select your investor who are prepared to wait for a much longer time, and they also have the same objective as what you have. Also, I believe that select global investors. And why global investors? Because they bring unique network they have, the markets which you may not have thought about. They can bring that on the table. Also, when you are going to exit, they can also bring strategic acquirers from those countries, which you would never have thought about. And so they can bring those kind of acquirers. In terms of who can acquire your company, and if you're looking at a strategic acquirer, then you look for maximum arbitrage. Now, what do I mean by arbitrage? For example, you're already Turkish company. You have a low cost base here for developers or for making the products made. And if the company is from a high cost economy, then there is a natural arbitrage. So many companies are being acquired in India today because of the talent play, because they have a natural arbitrage. And involve your investors throughout this process, through all the benchmarks which we talked about, involve them throughout the process. Now let's talk about the revenue side. I believe that, I've always believed the cash is king. I understand that there are so many businesses where traction is more important, and I agree with that model also to a certain extent, but 90% of the business is you need cash. If you have revenue, if you're focused on revenue, your fundraising will be easier, you will be able to preserve your equity, and you'll be in a much better situation in terms of maintaining your control over your company. Also, to look at, when you're looking at the revenue side, and the market side, look at the emerging markets and hotspots. There is no just, it's not necessary that just to go and look at San Francisco, but there are so many markets in your region and beyond. I mean, it's interesting that Turkish Airlines flies to how many? Something like 230 destinations and 113 countries. I mean, you are in an amazing location to be a global hotspot of, attending a lot of markets. And particularly for the emerging markets, I mean, so many people, don't know that what kind of, opportunities exist out there. And I have used this example last year also in Turkey, but I'll use it again. Who do you think consumes the maximum whiskey in the world? Anybody? Who do you think the maximum whiskey, which country consumes maximum whiskey? So there are 700 million cases is the world market. India consumes 350 million cases of whiskey, 50% of the world. Now, if I'm a raki manufacturer, and raki in Turkey is about 7 million cases. If I'm a raki manufacturer, if I move 2% of India's market, I can double the production of this country, raki consumption. So I think, most of the people would have assumed that it will be either United States or Japan or China, and not look India as a market. And there are so many dots which are not connected. And, it could be very important. The other thing is, of course, United States is the largest market, you want to be there, but it's also expensive to get there. There are markets where the cost of entry is low and the upside is huge. The margins are better. So now it is not easy when you're in a startup mode, when you have resources issue, to understand this global context. And that's why I suggest that, if you have these global investors from those particular countries, or from their particular markets, then they can bring you this unique market, and your cost of entry could be low and the margin could be much better. Also, we are doing few things in one of the investment which we're making in China. They're really focused on Chinese market. So we have asked them to actually do the licensing. So they are giving a license, I think it's in India. The Indian investors will invest in the Indian license, but they will also get a percentage of the parent company. So there could be some unique situation whereby you may not have the resources and time to develop certain market, excuse me, but by developing that market, your valuation will change dramatically. The people, and I have so many companies, and so many founders which I've come and I've met, where the co-founders are not on the same page when you talk about exit. And that's real disconnect. And so when we start going deeper and ask questions about what is the exit plan, at that time it surfaces. Also, when you are building a team, and if you are very clear about the exit plan, then you'll be able to bring them with the same vision. So it's fine that they are hard for business functions, but if they know exactly what they're going to get out of this and how fast they're going to get out of this, then they will really work in a very cohesive and comprehensive manner. Again, I think I can stress that it is better to hire human capital also around the world, so it will bring much more smart ecosystem. You can build much smart ecosystem, which again, building for the exit. In terms of resources, I also feel there is nothing like a free lunch. When you're in a startup mode, or in a seed mode, I understand that you're looking for a lot of services in lieu of equity. But when you're scaling, it is better to provide enough funding to hire the best services who can help you to scale. In Europe particularly, I find out there are a lot of direct investment from government, and there are a lot of tax breaks, and that's great. You have to have that. But you have to have a business plan and cash flow, which when you remove those handouts and the tax breaks, can you still survive? Can you still have a cash flow? Can you still have a better business? Then you're in a much better situation, even if that's a government changes and something changes and your tax break goes away. I mean, in my companies, it has happened so many times that government has promised us tax breaks for 5 years, and then they introduce a minimum alternative tax, right? And so all your equation changes, right? But we can still survive because I never plan anything on those bases. Tap into global resources because it could be very cost effective. For example, in terms of one of the things which we use in terms of hiring talent, that you connect, that how do you find that where the talent could be cheaper? So if you look at people's salaries, 30 to 40% of the salary goes into real estate, residential real estate. So wherever there is a low cost of real estate, right, without sacrificing their disposable income, you can actually have a lower salaries, and that can affect. I'm just saying one of the things. Also talked about, Sam talked about using freelancers from anywhere in the world. There are so many ways you can use the global resources to lower your cost. So I think, I like to, sum up in a way that, plan for your exit from day one. Have your, have smart global capital. Use global, human capital. The whole world is your backyard. Just leverage it, take a stroll. It is a fantastic place. I think in my travel, I do around the world once a month. And I feel that I'm extremely excited about where we are. We are in the human history. We are at the best time in mankind's history. In spite of what we hear from everywhere, the breaking news are always bad news. But we are living longer. My uncle is 97, and 3 years back, he got a new car. So, I mean, that is the height of optimism. That's the way he lives. So we are living longer, we are living healthier, we have more disposable income. And imagine that, in one of my company, we just finished 10 years. And I was in a town hall meeting in my company, and I asked them, and most of the people in my company are about, average age is about 30, that 10 years is a long time. Because 10 years back, there was no iPhone. The iPhone came in June 27, 2007. And imagine how many products here are designed around a smartphone. So it is a dramatic change which has happened in the last 6, 7, 10 years. And I believe that, the next generation, what we call the future, the digital world, is going to be so exciting. It's so fascinating. Then as I said, I came here 2010, first time in Turkey, and I have seen some of the company, 90% of the company were focused on Turkish market. Now which I see, and I think Barak has done a tremendous job for 8 years of giving Startup Turkey, Startup Istanbul, and that I see that, at least there are some companies which has a global potential, and it can be big companies, provided you start building your exit plan now. I think it is extremely important for Turkish company to look beyond Turkey. I think, I told somebody yesterday that when I came here first time, I saw the melting pot of cultures in this country. I grew up in India, and one of my companies, I advertised on TV, and I was advertising on 9 languages. And at that time, I realized that I'm already international, and that I overcome being Indian, and I went global. That was 25 years back. And I think every Turkish entrepreneur here has that international in you. Most of the MENA people has that cultural background in you. I feel that you can have a fantastic outcome if you go global and plan your exit from day one. And that's all. Thank you.